The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 24th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. My outcome here during the next hour is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I call the three forces of life. The three forces of life are knowledge, time, and effort. And force number one, knowledge. Today, most of us will have 3 meals and a few snacks. We will feed our body. But the real question is, will we feed our mind? You see, each day, we should be setting aside, say, $10, $15 a day for an education fund for our mind, for things like books, workshops, newsletters. Reason being, we can get a constant flow of ideas, and many of those ideas, they just simply become inspiration. So the best money spent is the money spent to cultivate the genius of our mind. Force number 2 is time. You see, time is simply irreplaceable. But gaining knowledge, well, it takes time. And there's always 2 ways to acquire knowledge. We can do it by trial and error, or we can hire a coach. We can find someone that can teach us shortcuts, one that can compress decades into days. Each will get us to where we're going, but one will get us there faster and with less cost. Force number 3 is effort. Huge difference between casual learning and serious learning. And effort is the investment that will open up the floodgates and ideas. You know that to be true. If you put forth the effort, light bulbs will go off. So remember, folks, always spend the money, the time, and the effort to achieve your outcomes. These are the investments that will turn on the lights and start turning your wishes into reality. It is Terrific Tuesday. This is Tiger Financial Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got green arrows across the board out here, albeit relatively flat. Dow is up 5 points, trading at 16,942. S&P is up 69 cents. It's traded at 1963. NASDAQ Composite up 11. That's the leader in the clubhouse. The upside up about 1/4%, I should say. Russell 2000 is flat. NDX 100 up 16 points. New York Stock Exchange down about 0.1% as we speak right now. Gold giving back its early morning gains out here. We'll take a look at Goldilocks here shortly. It's trading out at 13.18. Silver is up 4 pennies, trading at $20.96. Light sweet crude up 5-6 pennies at 106.23. Our call number 877-927-6648. Give me a call, folks. Happy to take a look at your stock chart. So I did mention gold. I showed this chart here yesterday. I'll tell you what. Let's do this first. I'll go back to gold in a moment. I'm going to put up this chart here. I use 3 charting applications out here. I use eSignal. Beautiful charting application. I use Anson Windows. That's one we're looking at right now. And I use the Ninja Trader platform out there. All great tools. All great trading tools out there. Charting tools. Now, what I want to show you, which is kind of interesting here, is you take a look at the stock chart. By the way, this is the S&P 500. So it's trading at 1963 as we speak right now. Let's move this over here just like this, just a bit. Now, what I want you to take a look at, when the S&P really kind of broke topside here, this is Janet Yellen Day. That was June the 18th out here. Kind of a wide-ranging bar. No question about it. And then what we've seen here since then, because the question is, was that a initiation move to the market moving higher? Everything that you would read in the press, everything that you might think of would say the answer is yes out there. Well, if that's the case, then why have we seen 3, now today makes it 4 small-bodied candles here? Is that the way an initiation move takes place, where you have a nice little upthrust, nice little wide-ranging-ish type bar, and then followed by small-bodied candles? Now, one could say, well, yeah, you could kind of do that, especially if you're in an overbought condition or an oversold condition out here. I would say, no, not really. If you're really going to have an initiation move out here, which is the way that everything has been played out there, you would see something more than these small-bodied candles. Case in point out here. Let's take a look back here. You know, there's always got to be a case in point to pay attention to. Let's take a look at the trading session here of March 4th. March 4th, 2014, nice wide-ranging bar to the upside. What did we see take place for the following 4 days? Small-bodied candles. That was that was achieving new highs out here on that trading session, just as this was on the trading session of June 18th. So very similar looking. And now in this case here, not nearly as bought. If you take a look at the 14-period relative strength indicator out here, but nonetheless, if that was the beginning of an initiation move, you would not have seen that. Much like down here, if you take a look at coming off of the lows back in February, nice wide-ranging bar, similar in looks to the one that took place out here on June 18th, and then this is more of the pattern that you would see with regard to initiation type moves inside of a market, and we're just not seeing that right now. That has got to make you say, something to think about. Well, now if we go from there and we take a look at Goldilocks, so you know I was going to go ahead and I was going to link the known to the unknown, so we use that as an example out here. And if we now go try to link the unknown to the unknown, that's the quickest way to learn anything. Trying to teach somebody something, make sure you can always link the known to the unknown out there, and the best thing is to try to cover the known first. Now let's take a look at the daily chart. I showed you this chart here yesterday. And what's interesting about Goldilocks, because we had wide price spread, accelerated volume, we had the whole 9 yards inside of gold. That was on the trading session of June 19th. Now, what I had showed you out here was that yesterday I showed that gold, if you take a look at the trend line coming off of the highs back here in October of 2012, the trend line should be just a tad higher than where it is drawn out here. In fact, let me try to redraw that. I know I could do a little bit better job of drawing the trend line out here. Let me grab that. Well, that didn't do very well. I said that I could. Remember, I am the one, serious story out here, folks. I was thrown out of kindergarten art school because the teacher was concerned about the stick man that I drew. So I am not an artist, and you'll be able to clearly see this out there. So literally, I wasn't thrown out of art school, but the kindergarten teacher did go ahead and had a conference with my mom, bless her heart, long gone, but about my art skills out there. So no Picasso in the Rhodes family, at least not on my end out here. Anyways, I got the line drawn. Pretty good at drawing stickmen or drawing lines out here. So there's the trend line, and price moved up into that level. Now that's wide price spread, accelerated volume. If that's an initiation move, just like we were taking a look at inside the S&P 500, price should have continued moving higher out here. Yeah, it's in a little bit of an overbought condition. But, folks, that is not the way an initiation move follows through. Give it a day off, okay, but not 3 days off, not 4 days off. So I tell you what, I'm in a lonely camp out here, a very lonely camp. But I just call it the way that I see it out here. And I say instead of an initiation move, what we actually saw inside of Goldilocks was a blow-off. Move out there. And today is actually a fairly decent indication as to whether or not that's going to take place. Why? Because we saw early morning out here, we saw gold go ahead and move higher, break above this trend line. Right now it's trading right on the trend line. If it gets back inside there or has another small-bodied candle, that's another indication to me that, hey, this was not an initiation move, and that 13.5-month cycle that I had shared with you folks before that shows that another move lower coming down into July would be the likely time frame. Now, I'm not short gold. I'm not suggesting that at all. I'm just suggesting that if we take a look at the candlesticks, we take a look at what normally would be an initiation move versus a blow-off type move out there, an exhaustion type move. That's what we're really looking at here. Now, we haven't seen much of a pullback, no question about it. We want to watch, and I'm willing to change my mind. I was willing to change my mind actually today if, in fact, we were to see some additional wide price spread inside gold as it bounces off this trend line. So very key, in my opinion, for gold today, for it to at least hold the trend line. If it gets back underneath there, in my opinion, it's just one more piece of information of an exhaustion move and then a move back to somewhere. Where that push lower is, I'm uncertain. The logical area would be to fall all the way back down to the breakout area. That breakout area being the low of the candle session from June 19th. So one thing at a time, I can just tell you that action, that bar, that initiation move, that is not normal, as we've seen here the last three trading sessions out there. And really the same type of a move inside of silver, but it's really gold that we want to go ahead and pay attention to. So that's what's going on, in my opinion, inside, and that's correlating those two elements together out there. So both of them, not to me indicating at all an initiation move out here. So right now we got markets are relatively flat. Let's go take a look at some things that are not so flat in the marketplace out here. Let's take a look at some stocks that are moving, and then we'll go take a look at the ETF structure after we come back from our first breakout here. And that means we're going to go take a look at, let's see, what do we have moving? C-Trip. C-Trip.com. It's down 4% off $2.57 out here. So let's go see what it is trading into. It's back below its unfair low, its support level. Never a good thing. It gapped down. It's got some volume behind its move here this morning, about 1.8 million shares, breaking its most recent swing point. That took place on June 13th, 1.5 million shares. So already breaking a swing point with volume. Never a good scene out there to do that. What does that set up? It sets up a move here, or at least a retracement back to the May 7th level. Let's take a look at potential retracement levels here. Let's go from the low of June 7th up to the high out here, which was 2 trading sessions ago. And let's go take a look at it. The retracement level, the point, it's going to hit the 0.382 level if it hasn't already, 55.12. We pull this back further here. Yeah, it's already hit the low so far this morning has been 55.17, so it's been close enough to hit that level out here. We'll put up a weekly chart momentarily, but it looks like normal move would be 0.618 retracement, but this is not normal. You've got volume off of the highs inside of this, and you're breaking its most recent swing point with volume. Really, since it's got volume at the lows out here, and that low has not been tested in C-Trip, that's the May 7th area, it more likely is really headed down there. That's your 0.786 retracement. That's also the top of that candle session. If volume can contract on the way down, maybe all it does is test the high of 48.77. If volume picks up on the way down, well, then you'll want to go test the lows. Let's see what the weekly chart here has for us inside of C-Trip. See if it's running into support and its daily or its weekly market profiles. What I should say out here, it says 46.15. That is the old resistance line. That's the red diagonal line going across my screen. So 46.15, not too far. Well, that's actually just a tad below the 0.786 retracement area, and it looks like that is where C-Trip wants to go. On a weekly basis right now, it's giving you an indication of a bearish engulfing candle, but we don't know how this trading session here or the trading week is going to end. Let's go take a look at what else we have moving in the market out here on the daily charts. Let's take a look at something to the upside. TripAdvisors. Let's go see what that's doing here. It's up about 3%, up $3 and a change right now. It's up above its resistance level. That is bullish. It's also tried to take out a swing point that had 1.6 million shares. Looks like it's on its way to do it with 366,000 shares today. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 15, S&P is up 2. NASDAQ Composite leading the charts here, up about 0.5%, up $20. And let's go take a look at yesterday's daily charts out here for the indexes. First, we'll start off taking a look at the Dow futures. I mentioned this a follow-up to yesterday's analysis of the stock chart. I had mentioned that if the Dow futures had closed just one tick lower than the open, that would have given us a key reversal session out there, and that's in fact what it did. So it's making a higher high, doing it with less relative strength. That's what the bottom of the chart here is showing us. And you had a key reversal session. Why do I say that? Because the inter-session high and low from yesterday was greater than and less than both those from the prior day. We closed in the opposite direction, and because we were at new highs out there, to me that is an extended condition out there. Now what you want to see is follow through. You want to, well, if you're bullish, you don't want to see follow through to the downside. If you're bearish, you want to see follow through to the downside. It is as simple as that. No bearish reversal signal or anything, but it's a key reversal session. It does say that the high from yesterday needs to be taken out to go full-blown bullish on the Dow futures contract. That would be a level of 16,911 out there. So that's just a follow-up to that stock chart. Let's go take a look at the actual indices out here. We'll start off with the SOX. SOX has certainly been on fire. Yesterday, very first time that we have seen the SOX produce any kind of bearish reversal signal in God knows how long. It's been a long time out here. He had a bearish engulfing candle. So that's coming in one of the strongest indices out here yesterday with bearish engulfing. That says that it's got resistance now at 635.96. No follow through to the downside. All that we've seen the SOX index do is get down and tag the 8-day exponential moving average. That's the blue line at 631.41 out there. It has done that here this morning. It's bounced off of that area. Getting below 631.41, though, that would give you some additional follow through to the downside. So any close lower than yesterday's close, which would be 633.13, but preferably 631.42 is a number that you'd be watching for, is an indication here. Remember, if I say the first time we've seen a bearish reversal signal, it's the first bearish reversal signal inside the SOX since May 13th, 2013. That did have some follow through in its session out here, but otherwise it's long and strong, but something to at least focus on and pay attention to. If we take a look at the NASDAQ composite, nothing bearish about this. This was moving higher with less relative strength. That has been erased, at least as of today. Yesterday's candle was a doji candle out there, and that usually means something if you see a lower close here today while you're up at the highs. But so far, the NASDAQ composite continues to be long and strong out there. Dow Jones Industrials not going to show, so here's where the futures contract shows a key reversal session, but the actual index does not out there. As I say, you don't need to trade the futures market, but you sure like to get access to it, at least end-of-day feeds out there. You can get free end-of-day feeds on the Ninja Trader platform. You can download their software for free, so that becomes a real easy way for you to pay attention to what's going on inside of the marketplace out here. As we take a look at the Dow, again, just like we were showing with the S&P 500, if Janet Yellen Day of June 18th was an initiation move, we are surely not seeing it in the price behavior of the bodies of these candles during the last three trading sessions. So also looks a little bit questionable, much like we took a look at inside the S&P 500. The transports, if we take a look at the Dow Jones transports out here, it too had a bearish engulfing candle yesterday, so a reversal signal. Now, it had a nice price relative strength divergence pattern back here on June 9th. It's not been able to take out those highs. Now, it's just cautious, not bearish or anything like that as we speak at the moment, but it did give us a little bit of a short-term topping sign here yesterday, and that is in the transports, at least candle-wise. NDX 100, no problems out here. It's up and above its most recent swing point high, which was a trading session of June 19th. So unlike the S&P, unlike the Dow, we are seeing a bit of a move, not a bit, we're seeing this lead the market higher as we speak at the moment inside the NDX 100. Nothing bearish as we take a look at that. New York Stock Exchange, NYSE, it too having that similar pattern of just narrow-bodied candles the last four trading sessions. Has to make you say, something to think about. If we take a look at the Russell 2000, let's go see what it is doing. It, too, yesterday, forming a bearish engulfing candle. No follow-through to the downside here this morning. A lot of time left in the trading session out here. So watch any lower close, and certainly the 1180-20 mark, that's important. 1172.90, also important. Nothing, got a bearish reversal signal. It's a cautionary sign, that's it. But other than that, just if you're long, just tighten up your stops. XAU. Let's take a look at the XAU. Nothing bearish about this. Today's candle, a high wave candle, suggesting that it's losing its way. A lot of time left in the trading session. 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 22 points. It's trading at 16,958. S&P is up 4. NASDAQ composite up 25 out here. Gold up $2. Silver up 9 pennies. Light sweet crude up 12 cents out here. Let's go take a look inside some of the sectors of the... let's take a look at some stocks out here that ordinarily we wouldn't take a look at here. Let's try percentage changes. Let's take a look at, here we go. Let's take a look at United States Steel out here. Let's go see what it is doing. It's inside the basic materials sector. It's up 2% here this morning, up 50 cents out here. Come on, why? Well, this is a 5-minute chart. I don't want a 5-minute chart. I want a daily chart. That doesn't look right. There we go. So if we take a look at U.S. Steel, it's up above on its daily base. It's up above any kind of resistance of its market profile, which is down at 24.26 out here. Looks like a little bit of a gap that's at resistance that took place out here, the trading session of April the 25th. Now, volume to the downside on that gap was 6.3 million shares. Yesterday was pushing in there with 5.4 million. Today, 1.5 million shares. shares. So that's an area of resistance to watch. That is the level of the low of April 25th out here. That's at 26.34. Close inside that with more than 6.3 million shares would be nice and bullish. If we take a look at A to B equals CD patterns inside of, there we go, inside of U.S. Steel out here, the A point is going to be the low from June 3rd. Your B point is going to be the high of June 11th. Your C point is going to be the low here of June 13th. 1-to-1 A to B equals CD. That was attained. No bearish reversal signal. Yesterday looks like a little bit of a shooting star candle out there, and that has not acted as any kind of resistance. So it's made the 1.272. A to B equals CD. Looks like it wants to try to get to that 26.93 level, and as long as it can close inside of 26.34, that is what it will be doing. Looks like it'll form a bit of a Gartley sell pattern out there, but not until you see the reversal signal. Let's look at retracements now from its swing point high on April the 9th. Oops, let me grab it. April 9th out here, down to the low. What the heck did I do out there? Let me try that one more time. I must have turned something off. There we go. That's down to the low here on the trading session of June 3rd. And let me do this. There we go. So the it's about to make a 0.618 Gartley buy pattern. That's what that little shooting star did, but no follow through here today to the downside. So if it the 0.786 level takes you up to 27.43, so it really needs to clear this 26.35-ish area. That is on U.S. Steel, ticker symbol being X out there. What else we have inside the to take a look at? Let's take a look at Dow Chemical. It's trading up about 0.7% this morning, trading out at 53.27. Let's go check out its stock chart, see what it's trading into, trying to break through resistance of its market profile high, and that's at a price point of 53.15. You're trading at 53.28 right now. It's taking on a swing point. Today's volume thus far, 1 million shares. It's taking on a swing point that's got volume of 6.6 million shares. So I've been trading for an hour, not too shabby. Similar type of volume inside of Dow Chemical out here. If you can take that out with volume, that offers an A to B equals CD to the upside. That would look like this. Your A point would be down here on May the 16th. Your B point would be the swing it's dealing with this morning, June 9th, out at a price level of 53.30. A pullback, a very small pullback, very small retracement, about a 0.382 retracement. So if we can take that out, Dow Chemical says, hey, I'd like to move up to about the $57 area. 56.92 would be your 1-to-1 A to B equals CD to the upside. That's what's going on there. Let's take a look at what's going on inside the financials out here. Let's take a look at any largest changes to the upside. We're going to deal with Citi Group out here. It's up 0.25%, up 25 cents right now. So let's go see what Citigroup is doing on its chart. It's trying to take on its resistance level, which is the old support area of its unfair low, 48.51 out there. So nothing real bullish when we take a look at Citigroup out here. If anything, maybe forming an A to B equals CD to the downside, as it did have volume to the downside on the trading session of June 13th out here. So retracement-wise, if we take a look and see where it's at right now from the high of June 9th down to the low here on that trading session of June the 16th, could move up to about 48.61, and the unfair low is 48.51. So it seems like that should be some pretty decent resistance for Citigroup. Let's see what else we have. Let's take a look at what is weak inside some of the financials out here. Change to the downside. You've got Capital One Financial off about 0.25%, trade out at 83.26 right now. Let's go see what weakness really looks like. Nothing too shabby out here on its daily chart, well above its unfair high at 79.79. It took out a swing point here recently from June 9th. That had volume of 3.3 million shares. Was a few days ago. Took it out with volume. So inside Capital One Financial, it has a confirmed A to B equals CD to the upside. The A point being the low of May 16th. The B point being the swing that it took out from June 9th. The C point looks like down here around the... Looks like might be the low of either June 16th or the prior day. 1-to-1 A to B equals CD. Says it wants to try to seek out the 87.30 level. That is on ticker symbol COF. Capital One Financial out here. Let's go see what we've got going on inside of consumer cyclicals. We've got Ford. That shows up on my screen here, up 1 6/10%, up 28 cents here. Let's go see what Ford is doing here right now. Ford is trying to take out a resistance level of its unfair high. That today is priced out at 17.12. You're trading at 17.16. Let's see. Ford looks like it had already done an A to B equals CD to the upside. Nonetheless, right now it's trying to take out a swing point from June 9th. That only has volume of 23 million shares. Today it's doing volume of 13 million shares. So it's about to go ahead and form another A to B equals CD to the upside out here, and that would look like this. You'd start with your A point down here on the trading session of May 7th. That becomes your A point. Your B point is this little doji high from June 9th, retracement down into the June 16th level. Only about a 40% retracement. 1-to-1 A to B equals CD says 1807. That's assuming that Ford can get above the B point today, close above the B point. It's already above it. That's at 17.12. It's 4 pennies above that level. Most certainly taking that on with volume as we speak right now. So that looks pretty good. Let's take a look at GM, General Motors. We'll take a look at Hog as well, as long as we're in the consumer cyclical area. General Motors right now, it's up above its most recent swing point out here. That's from the trading session of June 5th. That had volume of 25 million shares. It's taking it on. It's not trading above it. The volume, though, so far, 3.4 million shares. So weak, light on volume out here. Ford looks like the better of the two of those stock charts versus Ford is better than GM at the moment. Nonetheless, if it can take out, close above 3704, do with more than 25 million shares. That'll set up an A to B equals CD. That would take GM up to a price level of about the area of 39.46, maybe even 40.57. So that is on the stock chart with GM. So not too bad considering all of the bad press that GM has had. Let's take a look at the Hog. Let's take a look at Harley Davidson out here. I guess pushing out an electric motorcycle. It's trading out at 71.64. It's up above its unfair high, which is at 69.82 here. But this thing here had a nice sign of strength. Real nice sign of strength. That was back on April 22nd. Hasn't been able to do anything since other than just kind of consolidate sideways out here. So, Harley Davidson Hog, nothing really great other than it did have a breakout. Did not come back to close the gap out there. That's always a little bit dangerous, as long as it was trading inside the gap. Let's take a look at a weekly chart. Let's go see what the Hog looks like on a weekly basis out here. Weekly basis, not too bad. Not too bad, but still had volume. There's kind of like what's supposed to be an initiation move, much like we were taking a look at inside Goldilocks, inside of the S&P. We'll see how the day trades out here, but that was a big move on a weekly basis and really has not done anything since. That is the weekly chart for HOG. Let's see what else can we take a look at here. Let's look at the energy sector. The energy sector's been on fire. Let's look at BP. It's up 0.6%, up 32 cents as we speak right now. Let's go see what it is trading into. Looks like it's up at highs. Let's see if it took out a swing point back here with volume. That's a trading session of May 21st. Did volume of 3.9 million shares. As it got up above that with a little gap, 4.2 million shares. So there's an A to B equals CD to the upside. Looks like they are all over the place. The A point that I'm going to use, I'll use the smaller one. Down at the April 15th high, your B point, we're going to come all the way up here to the May 15th high, to a low that was put in on June the 4th. 1-to-1 A to B equals CD would take BP up to the level of 54.29. So 54.29, more likely 55.49 is where it looks like BP wants to head to. Let's see what else we've got out here inside the energy sector. Let's see, what do we have that is weak out here? Weak inside here would be ConocoPhillips. COP is the ticker symbol, off about 0.6% out here. So it is showing some struggles. Let's go see what those struggles really equate to. And on a daily chart, nothing too bad at the moment. A little bit of a bearish engulfing candle, but it's had some pretty nice volume here just 2 trading sessions ago. 7.4 million shares in volume today, 1.3 million shares. So not too shabby out. This chart looks fairly extended. This thing has been in extreme overdrive, meaning extreme overbought condition ever since the trading session all the way back here, right around the June 3rd area. So continuing to work its way higher. This is very bullish looking. Let's look at a weekly chart for ConocoPhillips. So with this being one of the weaker energy stocks here, you could fool me out here because it does not look weak. And just pulling back today, that's all it's doing. It had a swing point on October 28, 2013, 22 million shares, and it was taken out with 28 million shares. So the weekly chart here has an A to B equals CD pattern that is confirmed. Let's take a look at it. The proper one is coming back to April 15th. That's your A point, your B point out here on the week of October 21st, a C point. It's a little doji low, 62% retrace, 65% retrace, 0.618 retracement, we'll call it. Back on that trading session, 1 to 1.272 is where she's at right now, but on the weekly chart, very strong. Says that ConocoPhillips is looking to move up to the 92.21 level. It's 1.618 expansion on the A to B equals CD system out there for helping us to understand where price may want to move to. Let's take a look at potash out here in the basic materials as well. Oh, I have that. 2 basic materials. I'll have to come back and move that. Nonetheless, let's take a look at potash. POT is the ticker symbol. It, too, is breaking out. It is above a swing point yesterday. The swing point was May 12th. That had volume of 23 million shares. Got above it yesterday with 26 million shares out there. And this has been able to crawl. It's all the way back to that huge downdraft that it experienced. This is a weekly chart that we're looking at. We'll go take a look at the daily. So weekly chart already, last week it took out a swing point. And but it was running into this huge supply line. So the real breakdown began right here inside of potash. We'll see if there's any kind of turbulence. And right here being 38.81, you're trading at 38.30 right now. So we'll see if that breakdown, that's coming back to a breakdown area, much like you would like to buy a stock pulling back into a breakout area with light volume. Here is just the opposite of that. It's coming down into a breakdown area with light volume out there, and that is on potash. That was the weekly chart. Let me see what the daily chart here looks like. See what it is doing. Has a new market profile that just jumped on the screen here this morning. So bullish would be getting above 38.58 out here. Bearish to neutral really would be closed below 37.48. POT is the ticker symbol. Let's go take a look at what's going on inside the ETF structures out here. Let's look at the Qs. Qs are up 70 cents out here. They're up 0.75%. They're up large. So what are the Qs here doing as we speak right now? They've now just made the 1.272 butterfly. 93.56 is the number there. So far, intra-session, they've gotten up to 93.54. How do you like that? Within 2 pennies. Of course, my swing points might be off what I grabbed here. So now you've got a butterfly pattern, but boy, and you have a little bit of a price relative strength divergent pattern as well, but no bearish reversal signal. 8.3 million shares today inside the Qs. Not too bad. Yesterday, only 20 million shares. Excuse me while I drink a little bit of water out there and just soothe the Stevie's throat. So it's got some pretty decent volume to the upside out here. It's taken on a swing point from June 11th. That only had 22 million shares, so pretty good volume during the first hour of trading inside of the Qs. Excuse me. That is a strategic break. However you did that, Al, I appreciate that. My throat appreciates that. Right now, we've got the Dow. She's up 25. S&P's up 4. NASDAQ Composite up 27. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 22, S&P's up 4, NASDAQ up 28 points out here. Silver's up $1. Light sweet crude's up 11 cents, and gold. Silver's up $1. Gold's up $1. Silver's up 7 pennies out there. If silver was up $1, anyway, sorry about that. Now, so you get the market moving, slightly higher. No great action out here as we speak this morning, other than inside of the Nasdaq. The Russell 2000. I should take that back. Russell 2000 is certainly participating in the move. It's up $7 right now, up 0.6% out here. But here's an interesting chart. I like to take a look at a couple of different correlations in the marketplace. This is the one that we're looking at inside of the Dow. Now, this is the General Electric out here. I think weighting-wise, it's like number 27 out of 30, 28 out of 30, so it doesn't have much of an impact in the movement with inside of the Dow, but having its tentacles in a number of different spots, what it is, it's a great leading indicator for whatever reason. Maybe is because it has its tentacles in so many different spots. It's a great leading indicator as to a ensuing retracement to correction to something, and that is when you get a divergence. A divergence here. If you watch this on Tiger TV, the upper chart, the upper panel of my chart is General Electric. The lower panel is the actual Dow Jones index out here. And when you get a divergence, when you get General Electric moving in the opposite direction of the Dow, not to be used as a timing tool, be used as a, hey, buddy, be aware of the patterns that are out here in the marketplace. And you can see that it works really, really, really well out here. If you go back, this is right now just on my chart. I'm just going back into the 2013, the July 2013. And across the top of the charts here, I've got either a red line or a black line just indicating when you see a divergence. And these divergences resolve themselves in the direction of General Electric. Well, if you take a look at the high out here that was formed back right around the 10th of June, somewhere right in that range, you can see that it's been making, lower highs out here. And right now what we've got is we've got the Dow up at higher highs. So you've got another divergence that has reared its head. Hey, this can resolve itself. But the way that it resolves itself is GE moving substantially higher in the marketplace. Nonetheless, one of those divergences to focus on and pay attention. That means you'd really want to go monitor the individual stock chart of GE out there. Well, you're really monitoring the Dow, right? And so we took a look at the Dow. Maybe yesterday's key reversal session, wasn't it? But a lot of time left in the trading session, and I can tell you that this is not the normal pattern behavior that you would see with the Dow moving higher out there. And really, you got the same thing going on inside the Euro-US dollar currency pair out here. We've got the ES Mini. We've got it making higher highs. We've got the Euro making lower highs out here. And that is never a good scene. And only once in the last several years has this pattern here failed, and so that it too is sending a message of at least being cautious out there. But as we speak right now, the bulls here still have control of the market, need 135 net declining issues inside of the New York Stock Exchange. We're nowhere near that as we speak today, so the bulls still in full-blown charge here. You've got 1,020 net advancing issues. The volatility index continuing its move lower, just a tad. It's off 3 pennies. It's trading at 10.95. So we've got a little bit of a conflict out there when you take a look at correlations that say, maybe not so fast, and certainly inside of Goldilocks up $1.60. Pay attention to that trend line out there. As we began the show, we were taking a look at initiation moves and what is normally how price reacts when you see an initiation move versus an exhaustion move out here. And this, when we take a look at Goldilocks, this is signaling exhaustion move. And so is the S&P 500, but we'll see how she closes today. Folks, it is Terrific Tuesday. That means we've got our man Basil Chapman up next. Then we got the Options Hour. We have Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.